right, all you devils, how we doing today? Here we are on the 17th of December, and well, you guys had a mixed vote here on stock indexes. So since we had looked at the ES last week, I figured we'd take a look here at the Nasdaq, and kind of interesting here as we are currently realizing the measured move here, the algo play off of this 50. You can see it's essentially it's tick to tick. All right, so from the 50 low here, so what do we? Oh, call it 5,800. It's about 3,000 NQ points here, right? So you can see what happened here, right? So software just sits here with a catcher's mitt, right? Up they go, right? Again, I mean, I say it in every video. I shouldn't have to point these out anymore. We are literally about to go from one tick to the next. Now, that doesn't necessarily mean that we pivot here and that we have a major turn. It's just that we're likely to see a little bump there as this algorithm starts taking profit there. Now, of course, we have higher targets here. Very, very possible that this would just be partial profit, right? We never really know, right? But you can expect to see, perhaps a bit of volatility there as we approach that. Now, we are sitting here at all-time highs, right? There's virtually no resistance up here. We're getting a little hot. It's no surprise that we're up in the, we're over 70 here in the RSI as we just keep charging on here. Now, I know you can't see the detail here, but I wanted you to see this. Tick to tick, right? There it is, right? Doesn't matter if we're looking at a 1 minute, 1 month, 1 week, 1 day. Asset doesn't matter. It's all the same, guys. Doesn't matter. Chart's a chart. They all trade the same way. All right, so with that said, let's go down to a 3 hour here. So working off of the 2 low here, if we try and put some Elliott structure to this, if this is our 2 low, well, I can certainly get a clear impulse. I got a clear 3. Now here's where this is open to some interpretation. Not everybody agrees with this count. I certainly have had plenty of criticism of it amongst YouTube subs, but I stick with it until proven otherwise. So I think we go from a 1-2 here, and the pause is because of the shallowness of this relative to the length of the 1. It's not like we don't see them, right? So we just not quite to the 38. But here's where it gets a little tricky. Now, I think we go from the 1 wave here into an A, B, C, right? Lots of people don't agree with that. But, certainly, we're not invalidation. We're not invalidating an Elliott count here. There's no break of rules. We just have it's lower percentage to see a truncated C at that degree. It's a bit unusual, but the chop, well, really what we have here is just chop, right? We go into just a chop block here, if you will, right? We've got some pushes down here. We've essentially got this structure up here. It's, we're getting beyond it, but we've got this structure up here. The market is struggling. So we get just a block of chop here before we get some new direction. So down we come conveniently, right? Just perfect. Well, let's get it right on there on the tick, right? So we come from tick to tick to tick, right? So from the low here, right, pulling this up. Now we break here. Now this is interesting, right? So so the first move down, we get the break. Then we roll over the B wave. We're tagging the golden zone here, the 618 to the tick, and then roll again. Now it's the 50 to the tick. So you're doing a bit of deductive reasoning here as to what may have happened. So even if you make the deduction here that the algorithm here that would have been a buyer off of this pivot now switches to the sell side, well, as it's coming back up, right, at some point here, the sell side, well, here, I know it gets kind of crowded in here, but just so you see it. So here's the golden zone, and then they break. So then they switch. Right? Again, they just stay with it. Eventually, they get on the right side. So here at this 50, let's see if I can zoom in here a little bit more. All right, so swing low, swing high. We have this unusual formation. But from this low here to this, now here's the first one breaking. So the sell side breaks. So now we're back to, okay, well, where are we here? So if I go from this pivot to this pivot, golden zone. All right, you see that? So this golden zone here is relative to this. Now we've just hit second target. Well, pardon me. We hit second target on the 3 here. Retrace, interesting, right back to this, the prior target. And now we're off again. Now I know it's really hard. I totally get it. I understand it's very hard to see that and follow it. It's always easier when you do it yourself. All right, so staying with the structure, where are we in the count? Well, per the way I'm reading it, right? This is a 2. Let's go all the way back up. Okay, let's put it in context. Whoops, sorry. Turn that off so it doesn't go off while I'm recording here. Okay, so here we have the entire context. So I'm working off of the 16 low, all right? So this is the Trump era. So we go from the swing low here, we get our 50% retracement. So again, I'm not trying to put the entire history of the NQ into account here. I'm working off the 16 low. Can I get a complete count here? Well, I've got to start on one. So from the low, I got a clear impulse. I'm looking for the 2 between the 50 and the 618. I literally ticked the 50. Now I've just tagged that target. So, but where would that imply? That's certainly implying much, much higher prices, right? So we know at the largest degree here, right here at this degree, if we're going to get a 1, 2, 3, we're looking, God damn it, get out of there. Hang on. We're looking for that 3 up in this range, right? So 1, 2, we're looking for that big 3 up here. I'm going to use that. This is our shorthand, right? You know that. So we're looking for that. I mean, this is, it's hard to fathom it, right? I mean, it's like, really? Holy shit. Is that possible? You know, so doubting the strength of the bull here has been a losing proposition for 10 years. Now, I know, right? So you reach that point where you go, yeah, but it's been 10 years. And, you know, you look at the underlying fundamentals of the market and what we're doing to the debt and QE. Listen, guys, as long as you, I said this last week, right? You don't fight the Fed, you don't fight the trend. Right? We have massive, I mean, it is just massive central bank intervention here. Just today, you've got Trump tweeting what a great time it would be to lower rates again. They may do it. They may do it again. There's certainly plenty of pressure, right? Everybody wants to keep the party going. Well, everybody who's in the market wants to keep the party going. So trying to rationally draw conclusions based on the fundamentals, you may end up being right over the long term, but in the near term, if you're trying to trade this technically, shorting this, right? Remember this saying, right? This is burned into my brain from years of bucking this, and now I repeat it as a mantra. Sellers at highs create new highs. Now, somebody's going to get the turn, right? And you're going to say, well, what about that guy? He sold the high, and now he's made millions. Somebody's going to get it, right? But is that who you're trying to be? The guy who picks the top, who nails the top? That shouldn't be your goal. Your goal, your number one goal always is to protect capital, right? No capital to trade, you're not trading. That's your number one goal. Number two goal is to trade intelligently, with discipline, to be consistent with a trading plan. So trying to pick the turn here, it's just a fool's errand. There's just no reason to do it. Right? And I make the point saying that at some point, right, we're going to get a top, right? And then there will be a retrace that fails, right? And in the process of correcting will start. But trying to time it and nail it, you don't need to. That is not the goal here as a technical trader, is to nail the top. No, your goal is to protect capital and to trade wisely. And if you do that, regardless of whether you're right more than you're right, I can almost guarantee you're going to be wrong more than you're right, right? So that would be the next thing. Quit evaluating yourself based on your winning percentage. It's not about winning percentage. Some of the best traders I've ever known make 80% of their money on 20% of their trades, right? So it's just the old 80-20. It's just very consistent in the market. So you don't want to be in here going, I'm pretty sure. Okay, so this would be an easy time to say, oh, well, algo just hit that target, top's likely in. Really? I mean, does it look like, does this look like, I know you can't see it, but does this look like this is going to be our topping formation here, that we're going to finish with this? What are the odds of that? Is it possible? Fuck, of course, anything's possible. Of course it's possible. But does that look like a finishing pattern to you? I'll let you draw your own conclusions. If it does, well, have at the short. I wouldn't go near the short side of this, right? And I mean, day trading, sure, but for longer term swing trading, sellers at highs create new highs. It should be a mantra whenever you see something like this. We're at new all-time highs. Should be going in the back of your mind like a loop. Sellers at highs create new highs. Sellers at highs create new highs. Don't do it. I mean, you want to take a flyer on something? You get something that's you got a massive confluence of technical events. You want to take a very low risk, something out of the money. You know, you would need a massive correction. Sure, those are nothing wrong with that, right? But it shouldn't be you're building a trading plan around picking the top of the market. It's just a fool's errand, and it's absolutely not necessary to be successful trading. All right, didn't mean to get on a rant there. I really didn't. Let's go down to the detail here. Now, Elliottians can differ here on the count. There are certain sections where I think it's hard to argue, right? So per the idea here that this is trading as a 2, well, okay, so agree or disagree on that reasoning here. We're looking for an impulse to follow. Well, do I get one? Well, I sure as hell do. Right, I've got all the subdivision. Now this is a little, right? I considered the expanded B, right? I go to those kind of only if I'm forced to. So this looks like a 5, right? It does. Right, so it could be. It's a tricky one here. So you've got a double top up here, right? So this is slightly lower, but it's within ticks, right? It's really, really close here. So you'd have to go A, B, C to make that work, stay consistent with the Elliott structure. So coming off of it looks like 1, 2. So that, are we done? Are we topping here? That looks like 1, 2. We're still in the 3, 4, 5, right? So it's certainly not unreasonable to think that we might just, if we do tag the algo target up here and we get a little retrace, it sure looks like that's just going to be the 4 to the 5, doesn't it? Right, now, these hundreds, this 100 here is not insignificant, but the bigger one, we got the bigger one is this one here, right? At this, we did this last time we were looking at it. That's the one that we need, because that's the length of this one here, the first one in the series. That's the 100% the length of that one. Now, since this is at the moment playing as though we're gonna finish with an impulse, barring a major retracement here, and you'd be reconfiguring the count. What I'm trying to say is, we could finish where 3rd wasn't the longest, assuming the 5th was shorter than the 3rd, right? So there is certainly a path for that to be the scenario. But right now, in quantifying it, what we want to know is the 3rd of this degree, of this larger degree here, this is the 1 from the 2016 low, is the 3rd going to go 100% of that? And that's up here at 89.96. So, sorry, I pull that back out just so you get the context. Okay, so we've got a couple of things here. So let me recreate them here just to be easier to do it this way. Let's get that's the first good one. That's the first one we need. All right, so there's this one off the low. All right, so there's this one right here. Okay, so there's the 100, the length of this one. If this is going to play as a 3, pardon me. So I had the wrong, my mistake. Excuse me, guys. So 97.03 gets us 100% of the first one, and we're not there yet. This one here, this secondary one, is 100% of the second 1, 2, based off of the presumption here that we have the 2 in, but it's shallow, right? That's the one that only goes to the 38. Right? I know it's hard to see. But that's this one here that only goes to the 38. No, pardon me. It's between the 38 and the 50, right? Interesting point of control right there. But so from that, we don't make the 50, which is where you're looking for it off of this swing. And now we're ripping higher. So this one here, we're looking for that level here so that we can say, okay, well, I've got the ingredients here now for an impulsive 3rd, because I'm at least at or longer than this 1, 2. So that's this 3 here at this degree. got to finish there if we're going to hold the impulsive structure. But that would only be 100%, and we're looking for it higher here. This is the high probability zone, so why not plant the third there relative to this 1-2? So then you got to look into the subdivision and say, well, do we have the legs to get there without something very abnormal having to happen, i.e. some a substantial extension in the fifth to get up that high? Well, and so from that, let's go back to our 1 hour. Maybe we do 3 here. We can see more of it. Okay, so here's the 2. All right, from this 2, do I have the legs to get up here? Well, 1, 2, 3, 4, 5. Something is in the process of trying to complete. Here, let me take this off here just to clear up the chart a little bit. So let's get that one off. Okay, so when that 1, 2, 1, 2, 3, 4. Looks like that's done, right? So from the 2 low, just using the standard tools, right? So where are we looking for the 4? Between the 23 and the 38. That's what we get, right? So where's that algo target? Right here. But we can use that. That's 1. But we can also say, all right, well, let's look at the length of the 1 projected from the proposed 4. Well, we're just hitting 100%, so there's parity between this 1 projected from, oh, did I get it right? No, pardon me, guys. I got them on the wrong one. Get it right on there. Okay, so I should do it this way. So here's the 1, 2. Oh, there's 3, 4, 5. There's the internal retracement of this third relative to this 1, 2. All right, so let's making this harder than it needs to be. Okay, let's get that off. Okay, so that is a completed impulse that gives me my third. Now, how about let me take that off. So how about this 1, 2, right? Because I'm looking for that 5. All right, length of this 1 projected from this 4. There we go. Okay, so here's 100. We've just gone through. We're now sitting at the 1382, and it looks like this is not done yet. It certainly looks like the potential, if this is going to kick a little further, and there is some retracement, right, which would not be unreasonable to anticipate, some weakness or profit taking. It's not collapse. Collapse is possible, but it looks more likely that we'd go up and we'd finish the 5th right here, this one, at this degree. Put that back. Somewhere in this range here. We're looking for this to complete. I mean, shit, it could be the 2618. Nothing says it has to be here. But just looking at the context of this, we're still in the 3. So it's a little early to make that projection because we don't know where that 3 is going to pivot. Although that's not a bad spot here, right? 1, 2, 3, 4. Looks like that would be, again, there could be more kick in that 3. It's a little early to lean into those just yet. Let's get the 3 and the 4 before we start projecting the 5. But we can put some guidelines on it relative to the internal wave relationships that are already there. So I can see the completed 3. I'm going with this as the 4. The channel structure can't get much better. So I can see within this channel, I'm just working through this just gorgeous impulse. Right, so I got the internal impulse, I've got the impulse off of this 2 low, all suggesting that I'm approaching this third here at some degree. Oh, pardon me, at the higher degree. So that's relative here. Let's put that in a different color. Let's go to what have we not used here? Let's go to green. So I'm trying to get this third relative to this 1, 2. So once again, here I got to back up. Let's do it this way. From that 1 to that high to the proposed 2 low. Right, there's the 100, so I'm in the clear. So I have a candidate here. Now for this, at this degree, I have a candidate here because I'm longer than the 1 for the third. So I'm already in the clear here for the idea that this is 1, 2, and I'm going for the 3. Now if this keeps going, we're going to go get something higher. Great, right? So again, this is not a forecast here. I'm just kind of eyeballing, saying, well, relative to typical wave relationships, that looks like that's a reasonable spot for us to be looking for a top up here. But again, I mean, nothing says it needs to be here. I'm just kind of, you got to lay something out. You got to put these somewhere. Shit, this could be up here. For all we know, by the end of the week, the 3 could be that high. So again, it's not a forecast here. You got to lay something out. So is there a trade here? Well, yeah, I'm on a 3 hour here, so the 4 to the 5 is certainly tradable, right? I think you're kind of late here to be a buyer if you're trying to buy into the third. So for me, yeah, I once I get a pivot up here, if I'm going to come A, B, C down, maybe the lower side of the channel, that right, so that would be tradable regardless of what the underlying asset is. That's just I've got an impulse. I'm waiting for a three-wave retracement. If that gets into the high probability zone, again, why would you not buy that, right? There's no reason to. I mean, the risk reward would be low. I mean, I'm not saying, give it a whole lot of room, but it's just a little swing trade. So it should be percentage of account risk, right? How aggressive do you want to be? How much size are you putting on? But that's very tradable, right? There's nothing to say, well, that's a stupid trade. Other than people just, mouth open going, oh my God, can it keep going, right? How can it keep going? That's the thing, right? Bull markets, they climb a wall of worry, right? How can it keep going? It can't keep going. You know what helps it go? Sellers at highs. Create new highs. Those become the stops that fuel it, right? They got to buy it, right? If they're trying to sell it, they got to buy it to unwind it. Right? That should be in the back of your head. Sellers at highs, create new highs. Sellers at highs, create new highs. Just on a loop. Don't do it. See, you can do it and you might get away with it. And you're like, oh my God, wasn't that just a brilliant trade, right? But all you're doing is setting yourself up to make the same mistake. Well, you're reinforcing a habit that I promise you over time will hurt more than help. If you do it and get away with it, you're reinforcing the bad habit. It means you're infinitely more likely to do it the next time. It's just like moving a stop, right? Once you move it once, you're much more likely to do it again. Right? Don't move your stops, right? Now, if it's a tick or two to get on the other side of something technical, that's different. But don't do this. Don't do that. When you're doing it, right, that's a bad idea, right? So listen to your instincts, right? Have a trading plan, right? My maximum risk. See, if you want to move the stop a little bit lower, for whatever the reason may be, reduce the size. Don't increase the risk with your normal size. Oh, I want to give that more room. Okay, great. Reduce the size. That's the intelligent way to approach the risk, which is all we're doing. This is risk management. Preserve capital. You cannot let a trade like that get away from you, because that does massive damage to your account, right? That's the first thing it does. But it's the psychological damage that is so much more expensive. Right? Do it once and get away with it. Thank your lucky stars and put it down in writing. I will not do that again. Take my word for it. I mean, the market's an expensive teacher. Right? I promise you, the expense of my tuition in the markets, I don't know if I can put a number on it. It's more than I would care to think about. Market is a very, very expensive education. Right? So you can try and shortcut it just a little bit. Listen to people that have been doing this for a long time. Right? There is no mistake I haven't made. I promise you that. Perhaps trading without a stop, right? I don't think I've ever done that, right? But the most mistakes about entry and exit, I guarantee I've made them many, 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 many times, right? So over time, right, it's reducing the number of errors you make, right? Here's another thing that I can you'll learn it over time. The market always punishes mistakes, always. All right, so even if you took a trade here, a short, whatever, you took a trade, you got away with something, it will punish you over time. The punishment will be your temptation to do it the next time. And you'll do it again and again and again. And the market will punish you for that eventually one time that you may not recover from, right? Something like that. The unforeseen, the unexpected. You're making bad habits and reinforcing them. You get away with it once. You're going to do it again. The market will punish you. It has an unbelievable ability to do that. It just punishes mistakes. So take my word for it or learn the hard way, right? I'm offering you a shortcut. All right, there we go. I didn't mean to make that this long. So really, as far as I'm concerned here, the only trade that really is there that's setting up is the 4 to the 5, right? Barring something dramatic like that, right? There's no reason not to be looking to get into that. I mean, that's a decent little swing trade. Right? You sure as hell going to put a stop. I mean, you can use the market here. You can use the wave one high. Right? We know if this is going to finish as an impulse, if this is going to be our 1, 2, 3, well, we don't want it to overlap that. You could use this structure here as kind of a entry point. Right? You've got this nice little double top here. There's the trade, but you don't be realistic about how far that's likely to go. Right? At some point here, this wave is going to finish, and the larger retracement will start. Right? This is some point. Then it's the bigger 4 to the 5. Right? So it's still the opportunity remains on the buy side, in my opinion. Right? Take it or leave it, but. All right, a few things to think about, guys. All right, there you go.